Well, I think the dollar is going to roll over and fall dramatically over the next several years. And that's going to cause this inflation problem to be much, much worse because it's going to really push up the price of all of our imports. You know, back then, we still had a lot more economic freedom than we do now. We had a much smaller government. We were still closer to the heyday of capitalism in the latter part of the 19th century, the early 20th century. The Federal Reserve had not been around nearly as long, so it hadn't done nearly as much damage to the underlying structure of the economy. We were a huge industrial productive nation. We had big trade surpluses. We were a large creditor nation, much sounder economy. We had a lot of savings. We're the mirror image of that now. We're the world's biggest debtor nation, record trade deficits. We've got no savings. We have a complete bubble economy based on artificially low interest rates, excess consumption, financed by debt and money printing. And we're about to pay the piper for that. We're seeing now the tip of an inflationary iceberg. There's a lot more beneath the surface. Powell, despite pulling back a little bit, is still pursuing a highly accommodative monetary policy. He is throwing more gasoline on the inflationary fire that the Fed lit. So Americans, I think, are going to be dealing with a dramatically diminished standard of living as this decade unfolds. I think the dollar goes down a lot. The cost of living goes up dramatically. It's not going to be easy, unfortunately, for the U.S. 2022 will be worse than 2021, and 2023 will be worse than 2022. You know, this is going to be a highly inflationary decade. The economy was not in good shape before the pandemic. It was in a bubble. That was the problem. We really couldn't survive the economic downturn, so the Fed bailed us out with more money printing. You know, we haven't been innovating our way out of crises. We've been printing our way out. But we've printed our way into an even bigger crisis because now we're paying the piper because this inflation acts as a lag. In fact, I think we're still dealing with the inflation that was created before the pandemic. I mean, wait till we catch up to the even greater inflation that we created after, because inflation is the expansion of the money supply. Prices going up are merely a result of inflation. Now, what happened prior to the pandemic is a lot of the inflation was manifesting itself in financial assets. So we saw real estate prices, stock prices, bond prices going up. Consumer prices didn't go up as much. Now, they went up more than the government admitted because the CPI is a highly rigged index that understates the degree to which prices are rising. I think right now prices are rising at a faster rate than at any year during the 1970s. But instead of, being on the verge of doing something to contain inflation, we're just getting ready to make it worse because we don't have the tools that we had back then, or if we have them, we can't use them because of the level of debt that we have in the economy. And, you're talking about the consumer. The real problem is the producer. You can't consume unless you produce. Our productivity is collapsing, and America is more reliant now than ever before on the productivity of foreign countries because our trade deficits are exploding. Wait until the dollar implodes, because the only thing that's been keeping a lid on inflation has been a relatively strong dollar. Well, I think the dollar is going to roll over and fall dramatically over the next several years, and that's going to cause this inflation problem to be much, much worse because it's going to really push up the price of all of our imports.
John, which is worse, inflation or deflation?
Well, I think both are terrible if they're in the extreme. I think at the margin, though, the inflation that has been spoken of here, certain proportion of that is definitely due to supply chain disruptions that have occurred during the COVID era with either manufacturing plants or ports being unable to operate at full efficiency. And we've all seen the pictures of the ships outside of LA unable to unload. So I think that perhaps around about, I would put it at about 30 to 40% of the current inflation that we're seeing is due to supply chain disruptions rather than to underlying ongoing forces. It's interesting that Chairman Powell actually used the word transitory or temporary originally to describe unacceptably low inflation in the pre-COVID period, where it was running below 2% on a consistent basis. Then, of course, he switched to use the word transitory and temporary to describe the COVID inflation that we've seen following the supply chain disruptions. I think that was a mistake. I think he elongated the use of the word transitory, stretched it, if you will, to a point where it no longer had credibility, and finally, of course, had to publicly drop the use of the word. There is definitely underlying inflation, and obviously prices and wages, as people say, go up in the elevator but come down in the stairs. And so it's very difficult once these price and wage increases are baked in to then unravel them later. So there's definitely underlying inflation that is of concern, but a big part of it is supply chain related, and that's temporary.
Cryptocurrency is a real roller coaster ride. But Peter, with inflation, is cash a bad place to be now?
Well, absolutely, because inflation is a tax on cash. It's your cash being inflated away. You're losing value. But I want to just make one point about inflation, because this idea that it's the supply chain that's responsible, this is just not true. I mean, sure, when you shut down an economy, it's obvious that you're going to have less supply. You're producing less, you're working less. But what should have happened is demand should have gone down too. But unfortunately, the Fed did not allow a healthy decline in demand to meet up with the decline in supply. The Fed made the mistake of showering the economy with money, the worst monetary policy probably in history. When people were not at work and home, the Fed was printing money so the government could mail them checks so they can go out and buy stuff, even though they weren't working to help produce stuff. And so that is the problem. It is all a demand problem created by the Fed, created by money printing. And the money that the Fed is printing is going to continue to lose value, and that's going to be reflected in rising prices. So you don't want to hold cash. You want to get out of cash, but I don't think you want any U.S. financial assets at all, even stocks or real estate, because I believe that in real terms, they're going to lose a lot of value as America becomes a much poorer nation. So you want to invest internationally. You want to buy foreign assets, foreign stocks, foreign property. You want to own foreign currencies instead of the U.S. dollar. You want to own real money like gold and silver, but you don't want any of that fool's gold. Don't buy any Bitcoin or other cryptocurrencies. They're just part of the bubble that the Federal Reserve inflated, and the air is going to come out of that bubble probably faster than it comes out of a lot of the other bubbles.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.